A brand new report from the Congressional Budget Office gives politicians a choice they probably won't like.
Here's what it says, quote, a substantial reduction in the growth of spending, a significant increase in tax revenues, or some combination of the two will be necessary to maintain the nation's long-term fiscal stability.
But here's the question. You can say those things, but will lawmakers listen and exercise a little fiscal restraint? Let's ask our Fox panel. Mike Norman from the Economic Contrarian Update. Tom Atkins from RE/MAX Fairlawn. Euron Brook from the Ayn Rand Institute, who's here in New York, we're happy to say. Gary Kaltbaum from GaryK.com, who's somewhere in the cybersphere. And Peter Schiff, author of Crash Proof. Thank you, folks, for coming in. Well, Euron, since it's the first time I've seen you in person, good to meet you.
Good to meet you.
Let's ask, it's one thing to say pay-go and all these other plans. The CBO comes out with this statement. Will Congress ever spend within their means?
No. I mean, there's no incentive for them to do so. There's no, there's no ideology that would dictate that they do. They're just going to go ahead and spend. They'll slow it down periodically, as they have in the past. They'll accelerate when they have the cash. They'll accelerate it. But we're in a period of deficit spending, and there's no reason for them to slow that down. There's nothing down the pike other than a major economic problems that would do anything.
Tom, I've got to ask you, because as we look toward what the CBO has to say, this is a nonpartisan organization that says it just provides the facts, and they're flat out saying stop spending, get more tax revenues somehow, one or both, but get it done. Right. Is it going to get done?
Well, no, but first of all, let's describe CBO. CBO is a completely static organization. Everything they do is static. Every time we've had tax cuts proposed, they said, oh my God, don't do that because we're going to get less revenue. And every time they've been wrong, you get more revenue because we cut taxes, you typically get more revenue. So the CBO is dead wrong on that. However, they are correct when they say we got to stop spending money on stupid programs that don't work. Everybody's known that for 50 years. That's no mystery. Will it get done? No, because politicians are professional panderers. They essentially go out there every time they go out and go, we're going to give you free beer, vote for me. I'll give you free donuts and beer, vote for me instead. Now who's going to? It becomes this pandering game, and that's why it'll never get done.
Well, Mike? What about just starving them of the resources? Cutting taxes can have a benefit in terms of bringing in more revenue sometimes if it stimulates economic activity, but at least it gives them less to play with, usually.
There's absolutely no empirical or historical evidence that budget deficits create any kind of a problem. Look, you can go to the Treasury website back to 1789 and look at every single year. For 70% of the years of this country, we've run deficits. For the other 30%, we've had balanced budgets or slightly in surplus. The times when we've seen the greatest economic growth and therefore the greatest revenues coming back to the Treasury have been times that followed the greatest deficit. So I don't know where they're coming up with these numbers. Are they saying that at some point in the future?
We'll be able to ask the guy who came up with these numbers in just a minute. He's going to be joining us in just a minute, the guy from the CBO who authored this study.
Well, so does David Walker, who's the controller, the controller general. He's been going around the country saying that the country's bankrupt, but I think that's a
$9 trillion worth of debt is a lot of debt.
As a percentage,
lot of tax increases in the future that somebody is going to have to pay off.
Let's bring in Peter Schiff. Peter Schiff, do deficits matter?
Of course they matter.
How?
We've spent ourselves into oblivion. But, you know, what the government needs to do is cut spending, of course, but unfortunately they're not going to do either. They're not going to raise taxes. They're not going to cut spending. Revenues are going to fall off a cliff in this recession, and unfortunately the government's going to print up the difference, and they're going to create massive inflation. They're going to drive the value of the dollar into the ground, and the cost of living is going to go through the roof for every single American. It's unfortunate, but this is what's going to happen.
Well, Gary Kaltbaum, it is true that at times when everybody's writing off because of their tax purposes, people are writing off some of their debts. That means the government's going to get a lot less revenue, which means the deficit is going to start to balloon like it probably hasn't in years.
Well, look, I don't think our lawmakers don't even know how to spell the word restraint at this point in time. And yes, here is the big problem. The CBOE is using a 1.7% GDP growth in 2008 to come up with their budget numbers. I'm not so sure we may even get there. Anything lower, and it will blow up. And you know our government, they are never going to stop spending. We've tried that. We've been yelling and screaming at them for years. And even the guys that get newly elected and said, oh, I'm going to fix things up, what do? They go in there and 300 earmarks in the first week, so it's a problem going forward.
You're on the budget deficit, as the CBO says, and again, we are going to have Peter Orszag. He is the author of this study here. about $250 billion. Okay, that doesn't even take into account this $150 billion stimulus package. What would that do to the picture?
Well, it'll make it a lot worse, and it doesn't take into account extra spending on Iraq and on Afghanistan, which hasn't been approved yet.
Or the rebate.
And it doesn't, or the rebate, but it doesn't also take into account the fact that we might be going to a recession. That is, they're estimating 1.7% GDP growth. What if it's negative GDP growth, or what if it's just 0.5%
Or what if it's higher? What if it's higher?
And it might be
Look,
higher.
the
But
deficit,
the point is that the government has gotten away from the principle of what the U.S. government was founded to do, which is defend individual rights.
That's
And it
never
seems
happened.
like
We're not gonna
crazy.
argue with that.
It has.
It's never happened. I just told you
it
that
happened. It happened in the 19th century, and I know we have a long-going debate on the 19th century. It happened in the 19th century.
We do.
And the U.S. economy grew during that period at 9, 10, 11% growth rate.
Tom,
There's
last
no
word.
reason.
Tom, last
We
word.
have a $13.2 trillion economy, $250 billion is 1.8%. It's a deck chair off the Queen Mary. I'm not going to complain about cutting spending and creating more revenue by lowering taxes. You'll never get me to complain about
Deck
that.
chair on the Queen Mary. I love
Off the Queen
those
Mary.
analogies. All right. Well, we got plenty to pick over in a new report.
Another reason to invest in pharmaceutical companies that could save your life? It's not a bad idea.
Not a
right?
bad reason. The American Heart Association saying heart disease deaths have actually fallen to new record lows, and improved health care is part of the reason why. Is this further proof that free markets create the best medical system there is? Our Fox panel is back now to discuss it. Mike Norman, first to you. We hear a lot of criticism about pharmaceuticals. They get sued all the time, but what would we do without them?
Exactly. What would we do without them? I own Pfizer as an example. It's the biggest pharmaceutical company, very, very innovative, a huge company, and you have to be big. Look, the free market system is, as we've seen in this report about improving statistics on heart disease, et cetera, it is instrumental in that trend. But we also have to understand that it takes an enormous amount of research and development. That costs money. You need big companies like Pfizer. You also need, I hate to say it, you're going to hate me for saying it,
Yes,
you need some government involvement in this too, because only the government can conduct or fund these ongoing research at universities and at big corporations. It's part of a process, but clearly the free market system is a big part of it.
Peter Schiff, do you like Big Pharma?
Well, look, we don't need any proof that free market capitalism works. We know it works. I just wish we had it here. That's the problem. We don't have the free markets that we used to have. We have all kinds of government intervention and all kinds of regulations.
You're talking about the FDA?
One of the best things about free markets is that they work to lower consumer prices. Unfortunately, we're being robbed of that benefit by government-created inflation. And the prices are going up, and they're blaming it on the free market. I'm sure to the extent that the government is involved in health care and is involved in pharmaceuticals, they're slowing up the progress that would otherwise be enjoyed by the population if the government stayed out of it.
Should we just dismiss the FDA and say so long? A lot of people claim that they were saved from bad drugs by the FDA.
Oh, absolutely. I'd love to see the FDA go away. Let private rating agencies come in and replace them. Let private labs rate them for us. Let our doctors. How about us making decisions and our doctors making decisions about what drugs are good for us?
The FDA, presumably.
Yeah, but the doctors are making decisions for all of us. One-on-one is the way to make these kind of decisions. My particular circumstances are different than Mike's. Mike might need different drugs than I would. I might be dying of cancer right now, and there's an experimental drug that I should be able to have access to, but the FDA doesn't let me. I'm going to die anyway, but the FDA still prevents me from getting that drug. So I believe that, again, this is a function for the private markets, not the government. Government is doing nothing but violating my right to make a decision about what's good for me.
Are pharmaceuticals a good investment right now in a tough time?
Well, first of all, they're a good investment because people are getting old, and a lot more people are getting old. So you almost can't miss with it. Look, to further the marriage between Peter Schiff and I, people sometimes just don't understand that profit is cheaper than government. Always. Profit is always cheaper than government. However, let's also recognize that there are times where people get greedy. They want to make an extra buck. They skip this, they skip that, and all of a sudden you have some drug that's released out there.
But it takes
that's
years.
not supposed to kill people.
In many cases, it takes years to create a profit.
I know
How do you fund the research?
Gary Kaltbaum, we haven't heard from you yet. Gary, the pharmaceuticals have been hit hard, particularly you look at Pfizer, what Pfizer's gone through over the past couple of years with all the lawsuits and everything, and now perhaps more government intrusion in Medicare. Is it time to be buying into pharmaceuticals?
No. Look, the problem with pharmaceuticals is onefold. They're just very mature companies with no real growth ahead of them. They were the stocks for the 1980s, no longer going forward. And as far as capitalism, it is working. Every year there's new drugs coming out that help the consumer. They're coming from pharmaceutical companies because they're R&D. You know, the FDA, there's good and they're bad. Sometimes they're slow, sometimes a little quicker. But just read about all the great drugs that continue to come out on literally a weekly basis that are saving lives, expanding lives. I like what I'm saying.
Mike, you know, I understand your point because I went to Merck once when Ray Gilmartin was running it, and I met one of their lead drug developers, and the guy said, when I was developing this particular drug, starting off with it, my child was in utero, and by the time the drug came out, the kid was graduating from 12th grade. It takes that long. However, there are people on both sides of this who say, even so, all the money that these big pharmas are putting out to develop these drugs, and it's terrific that they're doing it, they're still overcharging. At some point, when somebody puts the thumb on them, is that going to make them less of an attractive investment?
Yeah, if somebody puts a thumb on them, but hopefully that won't happen. We have to also realize that, you know, profits are the lifeblood of capitalism. If they don't have profits, they don't have the ability to fund that research. And I still think I go back to what I said earlier. It has to be hand in hand, a sort of a partnership. And by the way, if you didn't have the FDA, by the way, S&P rated all these CDOs and everything else like that. How did that work out? Okay?
It's a signed by the government.
You got Moody's.
There are only two agencies.
Stay on point, gentlemen.
Getting back to our main.
All right, but the main point is, are drugs keeping us alive? Are the pharmaceuticals extending our lifespan?
Absolutely, and what I find horrific is these populist politicians use drug companies as a scapegoat. They want to tax them, they want to regulate them, they want to reduce their profits. When they come out with these high profits, everybody complains that drug prices are too high. These profits are being funneled back into R&D. These profits are a reward for all the past R&D they've done.
Remember, the biggest cost we need drug companies
Let
have
me ask you a question quickly about the prices of drugs. I get that they shouldn't be regulated, but then when you find out that the same drug companies are selling drugs for less expensive prices in other countries, and they're gouging a lot of elderly people who can't afford it here,
they've got to recoup all these massive costs imposed on them by the government. If it wasn't for all this government regulation, it wouldn't cost nearly as much to develop these drugs.
All right, Peter gets the last word, ladies and gentlemen. 401. Robert, thanks very much. Well, here to give us some perspectives on the markets, if you can give any perspective on a market as crazy as this one, our Fox panel.
Yeah, perspective or yelling. All right, we promise we'll try and keep the lasso on them. But can we blame these losses on the Fed? The Fed, who valiantly tried to jump in with a 3/4 point rate cut yesterday?
Because they wouldn't have had to do it if they didn't screw it up in the first place. Absolutely. All goes back to they took the Fed funds rate from 1% to 5.25% inside of 3 years. That's a 525% increase in 3 years. What do you think is going to happen? All the adjustable mortgages got crushed. All of a sudden, people didn't have as much money. They couldn't spend as much. The financial stocks took a beating, and that led this whole decline.
And Peter, they left the Fed funds rate at 1% for a full year. Was that if you have to focus on one mistake, was that the worst?
Well, they should have never lowered them in the first place. You know, they blew up this housing bubble. See, the problem with the economy is, you know, for years, Americans were under the delusion that they won the lottery. They thought their home equity was actually real wealth, and they borrowed trillions of dollars against it and spent it. And now we owe all this money on all these adjustable rate mortgages, and people are waking up to the reality that that was an illusion, that they didn't have that money, but now they have debts that they can't afford. We had a whole economy based on spending money we didn't have, and it is tumbling. And there's nothing the Fed can do to stop the market from falling. They can't stop stocks from falling. This is a bear market. It's going to get a lot worse, especially if you value things in real money. The Dow is now down 70% since 2000, priced in gold.
You know,
the NASDAQ's doing even worse.
The U.S. dollar, some people are starting to look at it and say, I remember the Deutschmark where we needed a wheelbarrow just to buy some schnitzel. You know, I mean,
that might be happening with the dollar soon.
But the dollar is weak, and it gets weaker every time the Fed cuts. Mike.
It's going to get a lot weaker.
Hold on, Peter. Did you hear me say Mike?
Listen, the foreign exchange value of a nation's currency is not the reflection of economic health. If that were the case, then we wouldn't be holding up these countries like Japan and China to try to emulate them, to replicate their policies exactly. Look, if anyone's delusional here, it's Peter Schiff who keeps repeating the same thing. The dollar has had zero impact on the growth of household wealth in this nation. We stand at the top of all nations in the world. Our household net worth almost $60 trillion. That is assets minus liabilities.
It's a bubble. The assets don't count. We got to pay
What do you
the
mean the
interest on
assets don't
liabilities.
count? Of course
They're
they
not
count. Are
real.
you out of your mind? The assets absolutely
don't
count,
count.
and they're adjusted for
Mike,
inflation. Look,
the
this is
assets are not
complete
real. If the
misinformation.
Hold on a
assets
second.
real,
Hold on.
we have
Let me
a
bring it out of that fight for a second. You're on. You know, the fact is that a lot of the problems that Peter points to and Mike points to and Tom points to are real. There were some mistakes that were made, but still, you are here. You weren't born in the United States.
No,
a lot of people are coming to the U.S. because this is the country where you can make something of yourself that you can't anywhere else.
Absolutely. Look, I still believe that this is the greatest country in the world and still is the freest country in the world to do business. It could be freer. It could be better. It needs to be freer. It needs to be better. And if we continue on the path we're on right now, things are going to get worse. Things have to get worse. If we continue spending like there's no tomorrow, if we continue printing money, if we lower interest rates, a ridiculously low interest rate like they did in 2001 and so on, if we continue bailing out, what do you think the decrease yesterday by the Fed was basically a bailout of the banking system? They lowered interest rates to steepen the yield curve to bail out all these banks that made bad decisions. They need to suffer the
It's the lender of last resort.
So Gary Kalbaum,
They shouldn't be. They shouldn't be. People should suffer the consequences.
Gary, the Fed, as the banker of last resort, will soften the blow of what would have been a depression, making it just a recession?
My problem is I just don't think the Fed has any control whatsoever. I think they have been a year behind the curve and everything, and they are just now playing catch-up. You know, this 3/4 of a point move took them down to 3.5, but you have the 2-year, I think, down in 2 and change right now, so they definitely have more to go. Look, there is enough to go around as far as blame to the Fed, but the Fed did not make the people at Citigroup and all these other places come out with these bad loans and fictitious loans, didn't make the lenders commit crimes, didn't make the borrowers go out there and accept money even though they weren't able to pay things back. Everybody is to blame at this point in time. And by the way, how much Red Bull are you serving these guys today over there? Gee, you can't get a word.
Watching the Fed cut the Fed funds rate is almost like watching a skinny brother go on a diet for his fat 300-pound sister. This is the problem here is that the government does spend too much. We do tax too much, and that leads the Fed to do these stupid things. And the biggest problem is the Fed is a bunch of 1930s economists in a 21st century economy. It's all screwed up. I'm not going to quit. I still love this country.
It's the Fed's job to stop the market from falling. Real estate
I have
prices
news for all of you. If the market rallies 1,000 points from here, everybody will start applauding the Fed again. We're all beholden to the markets and all the news that comes out every day.
I will not applaud the Fed.
Neither will I.
And I know Peter won't.
I will.
Never.
By the way, it's not up 1,000 points, but we should mention that the Dow Jones Industrial Average is now up over 80. Well, it's up 79 points right now.
Go ahead, Peter.
You guys are looking for the Fed to reflate a phony economy. Stock prices are going to go a lot lower. Real estate prices have to go a lot lower. The Fed can't do anything about it.
I lived, to Yoron's point, I lived for 10 years in one of the wealthiest countries in the world, Switzerland, one of the highest per capita income countries in the world. And I have to tell you
Too bad you didn't learn anything when you were over there.
Yes, I did. The average Swiss lives nowhere near the level of the average American. They live in small. They don't own their own home. Excuse me. They don't own their. Excuse me. I'm speaking here. Excuse me. They don't own their own homes. Only wealthy people own their own homes. They live in small apartments. They don't have anywhere near the amount of.
But that's all true, and that's what we need to keep. That's what we need.
We're keeping it.
To do that,
you know what?
You don't have stimulus packages that are going to inflate and increase the deficit.
Gentlemen, one at a time. Gary Kalbaum, very quickly, Gary.
All I know is Peter's been saying this economy's been stinking for the last 50 years.
No,
so
I haven't been saying it for 50 years. I've been
saying you were on the show
for
with me 2 weeks ago, and you said the economy hasn't been good for 50 years.
It has been
you said
bad.
that.
And I thought Gary was going to be the peacemaker.
Why don't you wake up? You know,
All right, Shabani. Oh, this is such an exciting day that we are not going to move away from the markets at all. From the Chicago Merc, where you saw all that action in the pit, to the New York Stock Exchange. We're back now looking at the Chicago Merc. That's where that open pit screaming trading is going on. But you better believe we've got a lot of folks screaming it at the New York Stock Exchange as well. But our own Jeff Flock is right there in the pit with the guys. Jeff, what's going on now?
want to give you this perspective here now. There's a guy I think we can get to. Bob, will you follow me right now? Okay, come on, let's go around here. We've got a guy. I think we can get our microphone in to a guy in the pit just to kind of give you. I heard the descriptions you were giving from the studio. Hey, Bobby. Oh, I know it's crazy. What's it like in there at the moment?
Oh, this is exactly what we wanted to see. We wanted to see the markets come back to get some strength. It's going to put an awful lot of confidence back into the public and also the system.
You think so? What's this about, though? What's sparking it?
Right now, just before 1 o'clock, Bush came out and J.P. Morgan came out and said the Fed's going to boost, and try to stimulate the economy in many different ways. It's not over yet.
It's not over yet, meaning?
The stimulation. We might see lower interest rates. We might see more money pumped into the system. Might see more tax cuts.
You weren't here this morning. Was that by design?
Yes, it was. I decided to take this morning off.
You came into the pit almost as this rally took off. What the hell do you know that nobody knows?
Well, like I said, the rhetoric that came out just before 1 o'clock is what pumped all this volume up and brought us up over 5,000 points.
Where's this going?
Where's it going right now? I don't know. We're going to have to wait and see the dust settles, but a recovery like this is exactly what we want to see. We're going to see how the Asian and the European markets react tonight. They'll give us a little more indication.
Bobby Gall, one of the market makers. Thank you, sir. Appreciate it very much. Back to you guys.
Yeah, Bobby just lost money while Jeff was interviewing him. Thanks very much. Jeff, we're going to keep your camera up. I want to bring back in the panel and Peter Schiff. What do you make of this kind of move here where the Dow has seen such a massive point swing and now we're up more than 270 points?
I don't really make much of anything of it. You guys need to refrain your enthusiasm. It's not a football game here. The market's going to go up and down. You're going to have short covering rallies. Is this a meaningful short-term bottom? I don't know. Maybe we'll have a few days of rallies. The charts still look pretty bad. We've done a lot of technical damage to the market. We are now finally in a bear market, at least in the NASDAQ. I've been saying that for a long time. You guys have been saying, well, it's not really a bear market because we're not down 20%. Well, the NASDAQ, I think, this morning was down 23%. We have a terrible economy. It's going to get worse. Stocks are expensive, and they're going to look a lot more expensive once their earnings disappear. So, if anything, you've got a little bit of a bounce here. It's an opportunity for people to sell.
Okay, Tom,
and then
Dad
they got to sell their dollars.
Dad says we have to restrain our enthusiasm.
Well, Peter, I love Peter, but Peter reminds me of a clock that's stuck at 3:15. He's wrong every minute of the day except for twice a day, and then he tells you he's a genius.
Peter,
look, we're creating wealth.
Are you kidding me?
Peter, I'm trying to defend you. Let me. Gold. He's been right about gold. He's been right about certainly that we were perhaps heading to a bear market, albeit very briefly at the moment. But
for 15 years he's been saying that. In the meantime, the Dow's been up 3 times as much.
Where do you
You've been
on. I've never heard you say something.
You got to tell me what's going on. You got to tell me a month before it goes up that it goes up, and a month before it goes down it goes down.
But what about now, Tom? Now,
look, this is going to start a rally because people believe that the federal government and the Federal Reserve is serious about kickstarting the economy and keeping the recession from happening.
All they can do is create inflation.
Mike Norman, Peter says this is just a short covering rally. What do you say?
I don't agree. We've seen this over and over again, time and time again. The Federal Reserve has enormous impact on the economy. We've seen the economy turn around when stimulus has been applied many times in the past. We've gone through recessions. We've gone through market downturns. Eventually, they always bottom out. They recover, and they do that very quickly when the central bank is there to
Gary
act.
Kalbaum, we should keep Gary Kalbaum. Gary Kalbaum. I don't think that's Gary Kalbaum. We should perhaps keep the sound, the din of the trading floor in our ears as we go to you. It's not a game, Peter's right, but it is a very exciting element of our economy that's going on right now. Is this just a blip or is it something serious?
Yes, it is me, Gary Kalbaum, by the way. By the way, when somebody holds up 2 fingers, that means they want 2 Hannah Montana tickets, okay? Keep that in mind.
That's what this is about.
Let me just say this. We dropped 1,920 points in 18 days. We were due to rally. If you remember yesterday, I said reversals like yesterday, now like today, give impetus for the market to rally. We're going to get a rally out of here. I'd like to see more confirmation, but I love one thing. When I see financials lead, it's a good thing, and hopefully there's more to it, but I want to see more than just one day.
You're on. What do you think about that point, which is often the case where whatever financials do, so goes the market?
That might be the case, but I think I agree with Peter on one point, and that is you can't read too much into one day's numbers. If I put on my finance professor hat on, I used to tell my students there's no real new news. We knew about the the rate cut yesterday. The market goes up, the market goes down on a particular day. We still face the risk of a real recession. We still face inflation. We forget that last year was the highest inflation rate in 17 years.
But isn't it
These risks are out there, and that's why you get the volatility.
Isn't it interesting that Bobby in the S&P futures pit was telling us that, and telling Jeff Flock that, boy, at 1 p.m., J.P. Morgan came out with some comments, and the president said a couple of things, which, again, no real new news, but yet the market sees upon what they already know and turn that into a rally.
When there's enormous uncertainty in the market, people seize on anything. And tomorrow, if somebody says something negative, they might seize on it in the opposite direction.
Peter, go ahead.
Huh? But no,
Go ahead, Peter.
I don't know if this is going to be any kind of meaningful short-term buy. You could say it's a reversal day. We took out the previous day's low, but I don't think we're anywhere near the highs from the other yesterday.
So
Gary, go ahead.
There has been nobody more bearish than me over the last 2 or 3 months.
What about me?
Okay, you, Peter. Pat on the back, Peter, okay? I'm going to send you a dozen cookies. You're always right. Look.
Gary, let me just jump in here. Per the NYSE, 6.62 billion total shares trading already.
Yes.
This number includes off-exchange trades. That would be the electronic trades. It could be the busiest day ever, guys.
Yeah, I'll say this. I think the leg of this bear market's probably over in the near term, but now I want to see some more confirmation going forward.
You know, what gets me excited is when I see 2.6 billion shares being traded, that tells me we got something happening here. If there's like your 1 billion or half a billion, that's not a confident rally. You see 2.6 billion shares being traded. That's a lot of confidence.
If this were happening in the absence of any policy adjustments, I would say it's probably a bear market rally. But we've seen some, not only the Fed rate cut, and don't forget the past rate cuts, they still have, to affect the economy.
And there may be more to come next week.
Potentially a stimulus package on top of it all.
They better come next week at this
point.
I mean, the market's pricing a rate cut next week. That's what they're pricing.
Don't bet
from
on
the Fed's perspective,
they tell you
this is a signal they better do it.
Peter, go ahead.
Talking to me now either.
There's nothing yet. Remember, the reason we're having all these problems is because of these stimulus packages in the past. The last thing we need is the Fed to come in, the government to come in to encourage more reckless spending, more borrowing. And you know what? I don't think the foreigners are going to want to finance it this time. They're not going to buy our paper anymore. So it's all going to come from the Fed. It's going to be a money printing fest.
Let me just mention, you guys, the Chicago Mercantile Exchange E-mini S&P 500 trading contract up about 20.75, and that is the rally that we may end on today, David. Dow Jones Industrial's up 294 points, a massive point swing on huge volume.
As you hear the closing bell, and today, in fact, is a day for applause. The traders got into the action in one of the biggest trading days in history. Huge number of shares traded hands today. Very much so. Are the Bulls taking charge again on Wall Street? Let's ask our Bulls and Bears panel. Mike Norman, Scott Blyer, Pat Powell, and Peter Schiff joins us as well. Scott, a couple of days ago, I'm going to give you a little credit. A couple of days ago, you said it's over. The bull market is about to come back. Now, you were the one who was saying that the bear market was coming about 6 months ago. I hate to give you too much credit, but you seem to be right on.
Today was a very, very, very important day. The most important day of the year. You know, I've been bearish for a long time.
It's a short year so far.
Absolutely, and it's been an action-packed year. We've packed a year's worth of business in 3 weeks. But the fact is, what you saw over the past couple of days was a worldwide margin call on hedge funds. That's what you saw. And today, you had Google down $50. The final bubble was burst. And that's what you saw today. Now, the Fed cut rates. That's great. We've been buying small caps, some financials, some mortgage companies because they were so cheap and not going out of business. We're rewarded today, but I do think that the bear market is over for now for the next 6 months.
Okay, Peter Schiff, you feel the bear market is not over, do you?
No, I mean, it's just getting started here. Although we've been in an ongoing bear market, as I said, since the peak in 2000, priced in gold, the Dow is down by 70%. The NASDAQ is down much worse than that. So Americans have been losing a lot of wealth in the U.S. markets. But, as far as the nominal declines, I think we still have a long way to go in nominal declines, particularly in the NASDAQ. And, I don't think you're going to get an end to a bear market with this kind of spectacular fanfare that's obvious to everybody. I think eventually the bear market will end, but it's not going to end with a bang.
Okay.
It'll be a
Schiff,
whimper,
you're
it'll be a long, drawn-out affair.
You're a
People will be
perma bear. You'd be
disgusted with
bearish.
stock by the time
You
it's
would be bearish if the Dow was
All right,
5,000
guys,
or
let's give the
15,000.
lady a chance here. Pat Powell, for goodness sakes, we shouldn't kick a bear, at least a bull day down, should we?
I'm just always reminded that even a broken clock is right twice a day. So
Is that for me or is that for
I'll leave that up to you. I'm actually coming somewhere in the middle of these two. I think the short covering is absolutely right. I think what we had to see is we had to see the financials turn around, and we
Which
saw
they
that.
did today
And we
in a big
saw that
way.
yesterday, though, too. You could actually see a glimmer yesterday that this, and I don't think that this market can really move forward without the financials. So got to keep an eye on it. You're absolutely right. 2 days does not a trend make, but 2 days positive in the financials is very encouraging.
I want to quote Brenda Butner, the great Brenda Butner here
Yeah, the
at Fox. Mike Norman, she said at the last 300 upside day, she said, I don't believe this day. And we did have subsequent very difficult days after that. Do you believe this day going forward as a trend?
I think the last 300 upside day was in November, and she was right to say it back then because I think we've had some major policy shifts. As I said, if this day happened without what happened yesterday and this sort of coalescing on this idea of a stimulus package, then probably it was a rally in a bear market, and Peter would probably be right. But I think conditions have changed, and not just in terms of policy. When you look at certain things in the economy now, Liz, when you look at mortgage applications, refis, when you look at the yield curve, when you look at bank lending, when you look at issuance of commercial credit, all the things that touched off this crisis late July and August, those things are abating now, but the media and investors are not paying attention to that, and I think this rally is real. I think the volume speaks for itself,
Absolutely.
and it's going to continue.
Absolutely.
But, Scott, should the folks out there keep a little bit of their powder dry before they come back in this market?
Absolutely. The market is wild. You don't get a 600-point swing and have that volatility die in 1 day. But interestingly, technically, forget about the stimulus. The market's old high in the year 2000 was 11,750. What was the low of this entire move? 11,650, and we bounced hard on a big volume.
Peter Schiff, here's what I don't think has changed or abated, and that is lending situation here. I think the banks are very scared now. They should have been scared enough before to make it a little bit tighter, but now very hard to get a big bank loan at this point.
Lending is going to keep on getting tougher. As the Federal Reserve lowers interest rates, yes, it makes it more attractive to borrow, but it makes it a lot less attractive to lend. Nobody wants to lend. If you look at the mortgage refinancings, the only people who can refinance are the ones that have conforming loans, and that's because Freddie Mac and Fannie Mae will buy them, and they don't care how much money they lose.
I can get a jumbo loan right now. I can get a jumbo loan right now at below 6%.
You're going to have to have a lot of equity on that house and great credit.
20%. 20% and good and decent credit above 720.
Scott's absolutely right. I've been shopping this. I've been looking at this.
No doubt.
You can, before the Fed cut yesterday, you could get an $800,000 loan.
But it's
for
not these fairy tale deals where you didn't put any money down. 5% down. This is going back to the old days.
20% down, good credit.
Yeah, okay.
The average American doesn't have 20% to put down. They can't, and a lot of people right now that have homes have no equity.
Well,
so they
there
can't
is still a
refinance
lot of
without
cash
equity.
out there, but we got to move on. We'll
The
be back to you.
Congressional Budget Office loans too, but should the government be in charge of helping prop up the mortgage market?
Let's ask our Bulls and Bears panel. I think this is something that even Peter and Pat would agree on. But Pat, let me go to you first. Should the government be doing this?
Oh my gosh, no way.
Why not?
What are they thinking of? The problem was too much money went into mortgages. Now they want to go in and they want to bail out the people who caused the problem. This is absolutely insane. Way, way too late. If you were going to do anything, you should have had this conversation a year ago. Coming in now is just absolutely ridiculous. A waste of money, and the Fed's going to have to do the exact opposite in a year from now. If they pump this up too much, the Fed will be raising rates to pull back the economy.
Scott, am I wrong in thinking that they're kind of acting like the hedge fund boys who want to run in, pick up distressed assets, and bundle them together?
Listen, Chris Dodd started speaking, and the market plummeted from down 100 to down almost 300, just as soon as he was done. if these guys would just stop talking and put the money back in their pockets, I think the market will be able to sort all this out. But I was just in Washington, D.C. this weekend, and I was taking the kids around, and we saw the government buildings, and all of the home-oriented FHA, all these government agencies were started in a recession. So what happens is we're going to have a new government agency to bail out homeowners. It's going to happen because the government wants to care about voters in an election year, and it's going to be very expensive.
But we're broke. We can't bail anybody out. You know, these decisions need to be made in the free market between the borrowers and the lenders. Let them renegotiate terms. But, you know, even if people stay in their homes, what everybody is missing is the fact that the home equity is going to be gone. People are not going to have real estate wealth. Americans aren't going to have the net worths they thought they had. They might still be in a house, but their house is not going to be an ATM machine or their ticket to the good life.
Well, I think most people realize their house isn't an ATM machine anymore. Mike,
Americans are going to have to dramatically reduce their spending. And
Mike, Peter, okay, get off of it. Mike.
But that's the problem.
Mike, go ahead, Peter. This is not the Peter Schiff show yet. Mike.
Look, if the government plans to do this at pennies on the dollar, which was kind of, you know, what Dodd expressed there, then what's the point? If they were going to do this to avert a depression, as, you know, a lot of these agencies, as Scott said, were created during the 1930s to, you know, help in
and in the
depression.
70s as well.
And they made it worse.
That's a different point. But I don't see the necessity of it, you know, frankly, to do this. But let's get over it. Look, we have deposit insurance here in this country. The government bails out depositors if banks go under. So just get over it. We have these kind of, you know, safety nets in place. I'm not advocating that they do it. Certainly not for pennies on the dollar. What is accomplished there? But we have a
safety net after we've crashed. The idea of a safety net is before the fact. This is ridiculous.
When a bank goes under, it's after the bank has failed as well. Listen, I'm not for it. I just said I'm not for it, particularly if you're going to bail out at pennies on the dollar. What's the sense? But let's get over it.
The distressed debt guys will do that.
We have safety nets. We use them in this country.
We have the pension,
Let's just understand.
We have the pension benefit guarantee court that takes care of difficult situations when pensions come into trouble.
You have to remember one thing about owning a home. Owning a home has a tremendous tax advantage. That tax advantage is a major floor under the price of homes, especially in major metropolitan areas. Now, granted, Peter, maybe we're not going to have 30% gains a year like we've had over the last 5 years because of the bubble, and we'll give some of that back. But homes will continue to have very strong value for the American consumer.
Peter, go ahead.
Yeah, look, first of all, the tax deduction does you no good if you have no job. And sure, there is some floor to home prices, but it's way, way below current market values.
We have 95% of the workforce working. I mean, who doesn't have a job?
5%.
And plus, we have a growing population. We're making a million homes per year. For a 300 million
Listen, Peter Schiff is a perma-bear. He's going to be bearish no matter what. It's that simple.
We've gone from a 2.5 million housing start rate to a million housing start rate with a 300 million population. Do the numbers. There's going to be a shortage of homes.
All right, let him finish his point. Go ahead, Peter.
It's amazing how often and how regularly you guys could be right and be wrong, rather, consistently wrong. You'd accuse me of being the perma-bear when I'm the one that's gotten it right for the last several years.
Wait a second. One of your clients sent me an email on 2003. You told everybody, well, we're in a little bear market rally, the market's going down. That was a Dow 8,500. So for someone who says he's perfect, that's a big mistake. You missed 5,000 beautiful points.
Hold on.
Peter, go ahead.
What I've been saying is that the market is going down in real terms, not nominal terms. So find out what the market was worth in euros, what it was worth in gold bullion, and see what's happening.
That's the last word. That's the they listened.
Yes, we listened to you, Liz.
David.
Wait a minute. What are you saying, Scott? I gave you the first crack at it.
Ladies
no
first.
more. No more.
So after today's wild late-day rally, should investors feel good about getting back into the market, or was this just an aberration?
Well, let's ask our Bulls and Bears panel, and I know one guy who's been in the market since Friday, Scott.
Yeah, we've been buying what was beaten down last year. Now, I'm not making retailers, small caps, internet stocks, not the big names that everybody loved late last year. mortgage stocks and some financial stocks. This doesn't mean you go in all in. All of this volatility is not going to end so fast. There's still headline risk. But I do think that we've put in a really good bottom today. It's very important, this kind of big, huge volume intraday reversal from a technical perspective. I just don't think you can go all in, but I do think you can put more than your foot in the water. Put your bottom half in the water now for the next 6 months, and we'll see where the economy stands after that.
Up to the bikini
Waist.
bottoms?
Your waist.
Mike, wearing the Speedo?
I've been in up over my head. I mean, I've been in the market the entire time. I don't think individual investors should try to time the market. I think if you buy...
Why not?
Because
Sidestep
history
it.
shows that you just can't do that. Pros can't do that. I don't think individuals can. I think you have to take a long-term perspective when you buy stocks. And I think if you could train yourself to use these sell-offs as opportunities to buy. We don't know, where the ultimate bottom is. I bought earlier on a lot of these stocks, but I'm confident that they're going to come back. We've seen this before. That's the approach that I think really, over time, turns modest investment into big sums of money.
Peter Schiff, go ahead.
Well, I doubt that this is a nominal bottom, but even if it is, even if we don't make a nominal new low, U.S. stocks are going to keep losing value relative to stocks around the world, relative to other currencies, relative to gold, relative to commodities. I've been out of the U.S. market for a long time, and because I've avoided U.S. stocks, I have a lot more money. My clients have a lot more money because we've understood the real problems for the U.S. economy and for the dollar, and we know we're in a bear market. It's a bear market like the 1970s.
Pat, what are you buying? What do you like? What has been a good bet for you?
This is a wonderful opportunity right now to clean up your portfolio. If you've made mistakes, if you've overextended yourself in a single stock, it's an opportunity. I think Scott's right. I think we're going to have a period in here where we're going to have a real opportunity to clean up those mistakes. If you've got 20% in a single stock, get yourself down to what is rational. Peter's right, too. You have an opportunity maybe to have some international in your portfolio, but not everything, because, Peter, the international markets are absolutely correlated to the U.S. markets, particularly in down markets, not necessarily in up markets, but in down markets. The international markets are highly correlated to the U.S. markets.
We saw Asia
absolutely, and you know what? That's predictable. That is predictable, because every other time we've had the downfall in the U.S. market, the world markets come right behind them, and you can go back to any period and look at this. So anybody who studies markets knows that the overseas markets are not independent.
Scott, you don't have to hold on. You don't have to be Peter Schiff to be somewhat bearish here. Our friend Toby Smith said you should go into cash, wait until the summer when the real bargains come in. Well, is that what the folks should do?
Toby and I are like yin and yang. When I get bullish, he gets bearish, and vice versa. But let me just say one thing about the dollar and gold. The Fed just cut rates in a surprise move, and the dollar didn't make a new low in the dollar-weighted average. And gold didn't make a new high. Something is happening here. The dollar is finding support.
No, the dollar made a new low against the yen.
Against the yen, but the dollar-weighted average did not make a new low. You can compare it and contrast it and talk about a carry trade, but my dollar-weighted index did not make a new low, and that's very important.
Look, I wouldn't read anything into that. The dollar is going to make many, many new lows.
But it's
got
irrelevant.
A long way to fall.
It's irrelevant. Look, the markets that fell the most were the markets in Asia, the markets in Europe. We fell the least. The United States market is far more undervalued than other markets. If you want to buy into these high PE markets like China and all these other places, go right ahead, but you're going to end up losing more money.
Remember,
by the way, gold is up today
$1.20
an ounce. It is now trading at $891 an ounce. It's still pretty high.
The crazy